Good afternoon and welcome to BizTech's Asian Midday Market Watch. Our guest today is Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, and he's dialing in out of Singapore. Now, Vishnu, as always, every Monday, great to have you on the show.
As always, it's my pleasure to be here. Thanks for starting the week with me, Brian.
Now, Vishnu, before we get your insights, we're going to start with taking a look at how crypto markets are performing. Bitcoin is at 37,814. It's down 2.06%. Ethereum is at 2,609.34. It's down 0.35%. Now, taking a look at how regional stock markets are performing, we start close to home. We start with the SGX, which is at 3,223.24. It's down 2.16%. Now, looking across the region, we've got the KLSE, which is at 1,599.23. It's up 0.47%. Shanghai is at 3,444.65. It's down 0.2%. The ASX 200 All Ordinaries is at 7,300.9. It's up 0.38%. The Nikkei is at 26,410.5. It's down 0.25%. The Hang Seng is at 22,458. It's unchanged. It's down 1.36%. And rounding up the numbers, it's the Kospi, which is at 2,680.77. It's up 0.15%. Now, Vishnu, this is really strange because markets are very mixed across the region, despite the escalation in geopolitical tensions. Tell us why.
Well, I mean, it does appear that markets are trying to differentiate the type of geopolitical risks they are encountering at the moment. So if you saw, markets probably sold off the worst on Thursday. Since then, at least into the European and the US session, they recovered on Friday. And that, I think, has been mainly on against the backdrop of coming to a realization that there's not going to be a full-on armed conflict between NATO and Russia. Rather than that, yes, the Russia-Ukraine war is intensifying, but the response from the West is mostly going to be via sanctions. So based on that, markets are now trying to price in quote unquote controllable risks in Russia, Ukraine that of course expresses itself through oil very, very explicitly. So they're pricing that in, and less so that kind of generalized European war risks, which would have seen things like gold spiking much higher and risk assets across the board falling much harder as well. And that's the scenario against which we have seen an exceptionally strong US dollar to the detriment of emerging currencies. And we haven't really seen that. We've just seen a stabilization after fears peaked on Thursday. And you can see that a lot of this is expressing Russia's risk, especially with the sanctions coming in. And there are two charts that are pretty interesting to see. So if you take a look at this chart here, what comes across is that Russia is all about oil, and you can see from this blue line that's Russian equities, and the orange line is oil price. Tight correlation is there, and you can see this is where the conflict risk comes in because oil has continued to soar as Russia plunges, Russian equities plunge, and that's because geopolitical risks and sanctions are dragging Russia sentiments down, whereas oil is escalating due to the supply disruption risks. And equally, you can see this is what happened to the Russian ruble. So Russian ruble has been fairly stable until the early part of this year, where it started depreciating against the dollar. And today, after the very harsh sanctions on the Russian central bank, as well as including some Russian banks in the exemption from being or at least participation in SWIFT, we saw the Russian ruble falling between 40 to 50% at one point of time. So we can see a lot of that weaknesses are coming through and being expressed as the risks that, or at least expressed as the dangers more specific to the sanctions rather than all-out war, which is why even gold has come off its peak on Thursday.
Now, Vishnu, then looking then beyond Ukraine itself, what are some of the key risks that are out there in markets this week?
Yeah, I mean that's the thing. Even though Ukraine and Russia has seized, no pun intended, the attention of markets, the concerns of markets, it doesn't mean that the pre-existing concerns have gone away. In fact, they continue to be there, and one of that is inflation. And this is particularly a sharp dilemma right now because on one hand, Russia is going to drive up inflation exceptionally so, and it's going to be a pretty hard impact. Yet, at the same time, this is probably going to be a negative demand risk. So central banks are now faced with a much harsher dilemma as to whether or not to tighten policy more aggressively in response to Russia or to hold back because of the geopolitical risk. So those are the types of risks that we see coming on board as we go forward. And very, very near term, we already see that impact on the FOMC. Whilst FOMC speakers continue to hold on to the view that they should tighten policy to address inflation, the pricing for a 50 basis point hike from a probability of 80% less than 2 weeks ago has now plunged to just 10% this morning because of the Russia risk. So you can see that
It's a
there's a
huge
lot more
shift.
uncertainty. It's a huge, it's huge uncertainty as well, because we're caught between a rock and a hard place, or rather, we are caught between Russia and a hard place, I suppose.
And also there's you highlighted central bank concerns and in terms of policy, we've got India and Malaysia this week among other central banks.
Well, I think to be fair, we can say both were probably on course to keep policy on hold. So it's the RBA, the Reserve Bank of Australia, and BNM meeting this week. To be fair, we can say they were both on course to be on hold anyway. They're not going to be in a rush to tighten. But if anything, there are two things that happen. One is the cautious hold now amid uncertainty is validated. Yet the underlying risks of dilemma, getting this wrong, either on the side of inflation or on the side of growth risks, downside risk to growth, that bifurcation grows. So they're not spared the dilemma. It's just that in the very near term, their view to hold policy is being validated. So that's really how they're approaching it. And speaking of data, right, we also have got quite a few Q4 GDP releases. We've got India, we've got Australia, we've got Korea giving a revision. All of this will show Q4 was fairly resilient, taking away the base effect distortion. But the trouble now is, I think there'll be less focus on the rear view mirror to say that was a good print. There's really a lot of worries about the forward-looking picture and saying oil is so high. What does this mean for the recovery? How far back will we be knocked? And Malaysia perhaps is in the best position, given that oil is an offset in terms of revenues, whether fiscal revenues or net exports boost. But even then, it doesn't distract from the fact that this is not a good picture, because if aggregate global demand is down, Malaysia's very, very strong industrial sector, the very strong recovery in electronics and electricals, that may now be impeded at the margin. So those are real worries for all central bankers.
Now, Vishnu, as always, thank you very much for your insights and thanks for taking your time to be on the show.
My pleasure.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Please check out our website, www.biztech.asia, for this video as well as podcasts, as well as our social media platforms. Please like and subscribe to our various platforms. Thank you very much for tuning in.